I almost invalidated a perfectly good setup because of news. And this backtest example taught me something I didn't fully understand before. Not every violent move is a reason to abandon your trading thesis. If you're new here, my name is Vi. I'm not consistently profitable just yet, but I'm building the technique and systems to get there. And I share these breakdowns so that we can learn together. Starting on the 15-minute chart, order flow is clearly bearish. You have a swing high and a swing low marked up. We turned bearish due to this aggressive move down. And since then, price has slowly retraced back into the 50% zone and pushed into the premium area of the bearish leg, exactly where we would expect sellers to step in. At New York morning hours open, we'll zoom in and identify this weak high. Why weak? I see this as a weak high because it fails to take this low here. This tells me that liquidity may be resting above this weak high. As we get ready for the trading day, we have to note what news is coming up ahead. And we can see here that the Michigan Consumer Sentiment Report is expected at 10 a.m. With that context in mind, we notice that the weak high eventually gets liquidated exactly around 10 a.m. when that news event hits. 9 minutes after the news event is released, we get a market structure shift to the downside. Sellers appear to be stepping in and changing order flow. But there's a problem. The shift was likely influenced by the news event that was released not even 10 minutes before. And this is where I almost made my mistake. I almost treated that volatility as confirmation. Instead, I'm learning to ignore it because news volatility can create temporary displacement that doesn't reflect true order flow. And so I waited. What I wanted to see was a second run on liquidity taken again without the noise. I targeted this high to be swept. And a few minutes later, that new weak high gets swept by price action. Now we need this demand zone that created the sweep on liquidity to be overrun by supply. If we can get a candle close on the 1-minute chart below this key level, then we're going to look for an entry. And a few minutes later, we get that aggressive displacement down. Notice the aggressive nature of all these bearish candles. Price closes before our key demand zone, and that's our confirmation. Sellers are in control. Here on the 5-minute chart, we'll identify this buy to sell candle that initiated the move down for our entry. We'll place our stops right above the highs, and we'll target this cluster of orders for our final take profit, since it could be a location where resting buy orders remain. We can identify a few stops along the way to take partials if we want. As we move price forward, we can see that we're tagged in and spend a little bit of time in drawdown as enough sell orders are hopefully being collected for the move down. A few minutes after that, it's not long before price melts and hits our partial take profit targets. We get a little bit of reaction around this cluster of orders where resting buy orders may remain. We can move our stops to break even, taking all risk off the table. But the sellers can't be denied, and the final take profit is hit, resulting in an amazing 4.6R trade. Here's what this trade taught me. Context matters more than reaction. If your higher time frame thesis is intact and your criteria are met, don't let news volatility shake you out of a good idea. Noise is temporary, structure is not. If these backtesting breakdowns are helping you think more clearly about market structure and execution, then subscribe. And if you want to see another example where context completely changed the outcome of a trade, check out this video right here. Let's sharpen our edge together, and I'll see you in the next video.